Hi, this is Jack from Alpha Charts with a state of the market video. Today is June 19th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's start with the SPX like we always do. And you know, pretty ugly day on Friday, and really the rest of the whole week has been, for the most part, a down week. We're now seeing price underneath my main short and medium term moving averages, and it looks like it's starting to roll over, right? So definitely some caution there. Actually, you know what? Before we go on, let's look at the RSP, the equal weight, right? Because I think right now is a good idea to look at that. RSP is worse than the SPX, right? So the equal weight is worse. What does that tell me? That tells me that there is a potential declining, not potential, there is declining breadth in the market. Also, notice how we're getting the cross here in the moving averages. We haven't seen something like this since not even, I mean, that maybe, back here in October. Now it bounced right back in October. So is there a chance that this could do that too? Absolutely. Is that, is this bar and this bar the same? I don't know. Maybe, this bar, whatever, something like that. But but it's been a while. It's been a minute since we've seen this type of look in the indices. So I think that's a take notice type moment, right? Not even this never really crossed. That's a bigger deal, that cross. So that's RSP. Looking at Qs. Qs broke out to all-time highs. It got a little bit extended. We're still kind of hanging out right near all-time highs on the Qs, right? So that's nothing too worrisome there. Looking at the equal weight though, equal weight never got to all-time highs. So there's that little bit of divergence, right? Came back to this area, and I guess maybe right here hit all-time highs. But so far it's starting to roll over now. Not quite the same nasty look as RSP, right? But still, you know, having a hard time getting above. This obviously looks a lot better. IWM rolling over. Again, not as look at these gigantic bars right here. Now, there was a rebalancing that happened on Friday, so that accounts for a lot of this volume. So don't read too much into it. But IWM, we'll call it at best, is in a range. So if it goes to the bottom of this range, it's not a huge move. Let's see, it's about 5% or so. If it gets back to the bottom of this range. And we don't know what's going to happen if and when it gets there. But right now, that's all I would say on IWM. In a range at best. Definitely got rejected again at this high. Let's look at the IWO. So the small cap growth ETF, nowhere near as nice as the other stuff, right? It never really came back. It's making lower high, lower high, lower high, lower high, and then lower low, lower low, lower low. Let's see if this breaks down. If this breaks down, that could be a major topping type action. We'll see. But definitely not one that you know, it's getting tight. Let's put it that way. Either it's going to break this downtrend line and hopefully make the right side of a base, or it could potentially roll over. All right, let's look at some subsectors. XLF, terrible, absolutely terrible. It was the leader, and now it just is in a free fall. It's in a free fall. Period. This is definitely a bad look. Momentum is to the downside. The cross already happened. Looks like there's more downside to come. That's XLF. SMH looks more like range bound, more like the IWM in a potential range. Pretty nasty looking day on Friday. Now 2.5% on the SMH index, so that says a lot. Down for the week. Again, not terrible, but not a good look at all on higher volume. Good chance that we're going to come down and come near this, 8, 9, 10%. I wouldn't be shocked if that happens. So as an indicator, again, this rollover, this rejection here not a good look at all for SMH. Looking at lumber. So lumber's at an interesting spot, right? Let's take a look and zoom out. So this is where it got rejected in the past. You got rejected here. So the question now is, in lumber, does prior resistance that had been support in the past, does this become support? So that is a big deal, right? If this holds a support and turns around, I think that this market correction, is more than likely short-lived, and it is very extended. So I expect this to hold a support. The question is, after a choppy bounce around in here, could be a week, could be 2 weeks, who knows? Could be 2 days, and these moving averages catch up to the downside. Do we make the right side of a base of some sort, and does this hold? So lumber is at a key inflection point. It's funny how um, everyone became lumber experts over the last few weeks, right? Because of this acceleration lower right here. And everybody's talking about lumber. We talk about lumber every week because it's an indicator. And, it peaked right over here, May 10th. And, and has started down, that was a big down day right there, May 12th. And so we've been saying that watch out for lumber. I always say 3 to 6 months. Who knows? It could be sooner. That's just a rough estimate. But now we're at a good inflection point. If this rolls over, below 8250 ish, right? Um, that could get really nasty for the market. So we're just watching it again, a big up, very quickly down. Now it's extended. We'll see what happens if and when these moving averages catch up, right side of base or continue lower. We'll see. All right, moving on. Let's look at bonds. Let's look at something good. So looking at bond ratios, just kind of clean this up a little bit. Take off my moving averages because we don't like those, and the volume. Okay, so here's the bond ratio, and the nice thing about this is that we don't see a big spike in this ratio, and I think that that is a huge positive for the market. And this, in my opinion, says structurally, I'm not too worried about the market. Short term, maybe even short term to medium term. Is there some problems? Yes, and we'll talk about that. But I think structurally the market's okay. If we saw this, right, that's what we want to avoid. And this looks nothing like this. So that makes me happy. Um, doesn't mean that we're not having issues, but structurally, I think the market's okay. Let's look at the VIX. VIX is spiking up. Um, technically, if you really think about it, high, you know, we'll say lower high, lower high, lower high, maybe lower high. Maybe this just makes a lower high here, right? We don't know. Could spike up, but it is a little bit more concerning that volatility is starting to spike up some. We'll say if it gets above 27, 28, we'll call it 28. That would be a higher high, and that would be an interesting situation. Right now, we're not there. We're only at 20, which isn't historically like a big deal. Obviously I liked it a lot more when we were at 15, 16, you know, look things that look more like this. And maybe we're in this type of choppy range bound area. And that would be okay, right? We may be, in a situation like this. So we're just watching it. Again, yes, there's a spike, not terribly high, but we're watching it. Let's look at put call ratio. So I've been marking the dates and these extreme readings. Um, you know, sure. So we got extreme on the bullish side, and things are resetting. We've seen a lot of this reset, not overly bearish, not bullish, someplace in between. So not much of a signal on this one yet. Again, you see every time we got a little too bullish, things did pull back and right around into this range. So we'll see if things continue lower next week or not. But as of right now, things aren't looking too yeah, there's just no signal. I mean, that's really what it comes down to. value line geometric index. Here, I talked about this a lot. This was the divergence that I was talking about with the RSI. I thought that was a big deal. Yeah, I mentioned it the last few weeks at least in the videos, and now we get the breakdown, and boom, we've been watching this again since, at least for the last few weeks for sure. That's a breakdown in breadth for, and can we get up to back to the 600 area? Why wouldn't we, right? I mean, that would just make sense. So this is the beginning of a potential bigger move down, I think. Um, at least, in the breadth studies. What else we got to look at today? Oh, let's look at TLT. Back to bonds for a second. Yeah, people are kind of rushing into some safety trades. Looking at TLT. This is the 20-year Treasury, and you see the big spike up right here. We'll see if it gets to this 149, 148, 149, 150 area, somewhere around there. And then see what happens, right? We don't know. If it gets above 150, I think it's a different environment. But 149, 150, that's where I'm watching for TLT. Yeah. So there's that. And I want to pull up, let's look at MMFI first. And you can see MMFI. And you can see that, it's at 44. I've been told to take log scale off. So I'm going to go ahead and take care of that. There you go. Not on log scale now. So you take a look at this. And it's at 44. And so we're getting this, downward trend is continuing. And it's not really a signal at this point. If we get a severe oversold back into like this 10%-ish area or lower, that would be a buy signal for me. And you can see every time it gets down here, that's a pretty good buy signal. So once we get to that 10% area, that would probably coincide with a put call ratio, in this range. That would be pretty aggressively bought at that point. But we're not there yet. Actually, right now, technically no signal going on right there. Okay, back to log. The last thing I want to talk about, and I haven't talked about this in the past, is Bitcoin as an indicator. All right, so here's Bitcoin. Let's just leave it for a line chart for now. And had the gigantic run, got up to whatever 65,000, whatever this was. And now is looking like this. To me, and let's go ahead and just put a 200-day moving average for fun. It's below its 200-day, and 200-day is going to start to roll over, right? And to me, this looks like a short. This looks like the next move down is about to come. Now, we've already had a pretty good move down, 48% or so. So another 48% down, roughly gets you to, we'll call it 20,000, right? Again, these measured moves, it's not exact. So roughly 20,000. So could we see another move down in Bitcoin? Yes. Is Bitcoin a great indicator for the market? I think it is. I think Bitcoin is a great indicator of risk on and risk off. If risk is on, we're in this looking like this in Bitcoin. If risk is off, I think Bitcoin rolls over and we start breaking down. And I think 20,000 wouldn't be shocking to me. So I think I'm going to start using Bitcoin a little bit in these videos too. Again, as an indicator of bullishness and sentiment or bearishness. And to me, this says that things are going to be bearish. Could this go to make a right side of the base? Absolutely. And that would be a very bullish outcome. To me, this looks like a bear flag. This looks like it wants to roll over. Nothing looks nice about this chart at this point yet. It's just been chopping out. This says, it's getting, a little bit loose in here, trying to, I think, we get these spikes up and then they've been sold aggressively, once it gets into that 40,000, 41,000 area. Yeah, Bitcoin, I think, is saying, has another leg down. All right, so let's put everything together, okay? I think that we have a huge problem with deterioration in this market. I think that you see breadth rolling over. I think that SMH, is in a range, and financials rolling over. People aren't extremely bearish yet, so there's complacency in the market. You're seeing volatility come back in. Again, just breath is not doing well. Bitcoin is rolling over. That's again um, a bearish sentiment. Now, let me tell you what is working right now. I'm gonna go to my favorite scan, which is a scan I post every day on Twitter, and this was Thursday's scan, but because it just shows it really well. What are we seeing here? Software, 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 right? Software, software. Keep going. What are we seeing? Software, 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 right? Look at all these software, software, software. What's leading the market right now? You tell me, right? There was the whole scan. It was 45 names on this particular scan. It was rather robust. And literally, software dominated everything. So what's that telling me? That the market is still, with the 10-year, you know, not spiking higher like we were worried about, and it's starting to maybe um get stay in a range, in this range or whatever. We'll see what happens. Maybe this is a bull flag, who knows. But as of right now, software is back in vogue. So I think that's okay for the market, right? That's pretty good for the market. I also think that bond yields not spiking, at least not yet, right? Bond yields not spiking yet. I think that is really good for the market too. So overall, the market is definitely in a rough spot right now. I think that there's a good chance that this rolls over. Does it come back in here and have a date with the 200-day? Maybe. Maybe undercuts it and gets that 300 level. Maybe. Maybe it just goes sideways, right? That's another possibility. Oh, and I wanted to mention also, I forgot about this from the beginning. You know, as far as targets, what another call it negative in the market, or worrisome in the market, is again these Fibonacci levels. Could the market show a quick spike up to 350, 360? We're not that far away from 350 right now. Absolutely, it can. But that is a very important fib level from the 2000 high to 2002 low. I think 368, anywhere from 350-ish to 370-ish, that area is going to be really, really important. Let's go to daily. And we're, didn't quite get to 350, got kind of close. Again, could we see another spike up? Absolutely. Once we get even closer to this range, which is roughly, max 7% higher, maximum. Could this be one last hurrah spike up to try to get everyone bullish again, that we're breaking out and so on and so forth? It could be. But again, this is an area that provides, I would be very cautious. Lumber rolled over. Again, there's a lot of things in my state of market that says caution is warranted. I've positioned myself to be cautious right now. Did it earlier this week. I've posted it in real time on Twitter when I start to get cautious. I'm gonna be taking a vacation pretty soon too, and I basically became cautious, a few weeks beforehand, because I don't want the, you know, when the market looks bad, or not bad, but more volatile, and it could go either way, and there's omens like that we looked at today in the market. I'd just rather go to cash, let it make a decision, and there'll be setups waiting for me. I always believe that there's another setup out there, right? If I miss this one, there's another one right behind it, just as good, that we're going to be able to hit. Anyway, I've talked long enough today. Hope you all have a good week. Be careful out there. Market's looking a little rough. Know your time frame and risk tolerance for this, and know for the signs that for both scenarios, right? The bullish and the bearish scenario, because they both can play out. Okay, and good luck. I'll see you guys tomorrow for my stocks to watch. Hope you all have a good rest of your week.